You might think life insurance might only be for someone younger who has a family who is still working, but life insurance can actually be a really great retirement tool for many different reasons. Watch this video. We're going to have a conversation about some of the areas that life insurance might be useful as a retirement planning tool as we make that transition into retirement. Hi everybody, Logan Sadler. Thank you for stopping by here at the Financial Beat YouTube channel. We appreciate you stopping by. If you haven't yet, go ahead and click subscribe and check out some of our other videos that we've done on different retirement planning topics. Today's video, I wanted to talk about life insurance. As most of you guys know by now, I am a financial advisor that uses both the market side, the investment side, as well as life insurance for our clients. And I do know that it's a very valuable tool for some people, depending on how you want to use it, okay? I know life insurance might be a bad word for some of you guys watching this. You might not like it, or you might have heard, maybe too many salesmen out there maybe pushing it for different reasons. Today, I just want to have some conversation really centered around some of the ways it could be used for you. Again, it's not for everybody, but it could be a good instrument to use for certain cases. And again, we'll talk about that here today. Life insurance, again, being a bad word, I always like to say, as a financial advisor, I see the other side of that. So when a client comes in and maybe their spouse passed away and now they have $500,000 of life insurance money to now use to supplement income, it's not a bad thing, right? When I see kids come in and their parents passed away and they were able to leave them a hunk of life insurance, it's not a bad thing, right? It's a great asset. So I always tell people life insurance is just like a lot of other insurance out there, maybe car insurance or other things that we pay for each month that we might not really enjoy paying for until we need it. And then we go, oh, okay, I see why we were doing this. There's huge value in it when something worst case scenario happens, okay? So that's the way I like to describe life insurance. Again, there's many different ways to use life insurance. One of the most common is there's really two forms of life insurance that are the most common. There's either permanent or term, right? Meaning temporary, maybe a 30-year term. And then there's permanent life insurance, which is you have it for as long as you pay on it or for as long as that specified amount. And typically that's life. So again, that's the most important type of life insurance decisions, I would say, is to try to find out what is the type that you need that best suits you. Now, the other form I like to talk about that's really important is what different uses are out there for life insurance, okay? You might have think maybe I just pay monthly for it, and if I pass away, then there's a benefit. If not, then I'm never gonna see it. That's one form of life insurance called term life insurance. Again, not a bad form of life insurance. We use that a lot. It's real cheap and you can get a lot of leverage for your money you're paying. But there's also many other forms of life insurance that you might need to use or might want to use in retirement planning. So I wanted to talk to you guys real quick about some of the things we use for our clients that might be able to use life insurance to cover a couple of things across that retirement planning road. So one of the first things I want to talk about is traditional life insurance. If you pass away, typically that leaves a death benefit, right? And I always tell people is there's a couple different ways to use a death benefit. I was just having a conversation recently with one of our clients, and it was an interesting conversation because him and his wife had saved up a really good amount for retirement. They've done a great job of putting money away. And then all of a sudden they got to this point where she said, you know what? I want to slow down our spending because I want to leave money to the kids, right? A lot of us out there might want to leave a legacy. That's one of the ways to do it. And she really wanted to spend less money to leave more to the kids. He said, you know what? We work 30, 40, 50 hours a week for 30 or 40 years. I want to enjoy as much of this as I can. And if I leave behind some money, then well, great. So you see the conflict, right, of goals there. One of the best ways is we actually were able to put a life insurance policy in place to where they left behind a tax-free death benefit to the kids when something happened to them. Now we have that legacy plan taken care of, which meant they were able to spend a little more freely like he wanted to do, and as well as the life insurance was in place to cover what she wanted to do. So you see how there's a way to kind of use that for a, kind of a double-edged sword there, to use that for a death benefit. It's not just for young kids or any of that stuff. It's a really great estate planning tool. The next one also is I have husband and wife sometimes where maybe they took a single pension payout, or they have an annuity that's a single payout, or one of their social securities is going to disappear when something happens to the other one or the other. So we're going to have a huge income drop off. Life insurance is another great tool in retirement to where, okay, we know that if so-and-so dies, we're going to lose X amount of money per month. Well, we could use life insurance maybe to replace that if something happened to that spouse. So you see there's a lot of different uses for it well into retirement that we have to use for clients to make sure our retirement plan isn't getting in danger later in life if something happens to the other spouse. The next form I wanted to talk to you about is there actually is some investments out there through life insurance. Some of the permanent ones out there, they are a great way to where you could put money into those, sometimes lump sums. I have some clients that will put a lump sum of cash in there, and they actually grow cash value tax-free. So that's one of the best parts about life insurance, whole life or universal life. There's different forms of it. And basically you could put money into those accounts and then withdraw money if done correctly, 100% tax-free. And a lot of them have good growth rates and might be diversified from market loss. They work kind of like an annuity where if the market drops, you don't suffer any risk in those. So that's a huge tool we use for some of our clients when maybe Roth conversions aren't a good fit at this point in time. Maybe we have all our money in an IRA and we're looking for some tax-free growth and we have a lump sum of cash, then great. That might be a great way to get some tax-free life insurance cash flow out of it. And if you pass away, then there's a death benefit, right? So that's another way we'll solve. The other one that's really popular a lot right now as well is long-term care. A lot of us out there know, again, this channel is really intended for retirees. So most of you watching this might be in that realm where we know that some point down the road, long-term care is going to become a reality, right? There's a huge majority of us that are going to spend some time in a long-term care facility. Well, there's actually life insurance policies now with long-term care. It's like a hybrid policy, essentially where you could put money into those. And essentially, if you use it for long-term care, then great. It pays out a huge benefit for care. It's a really great policy. They're very strong. But if you don't use it, do you remember those old ones you used to pay for? If you never used it, it was gone. All that money you paid in there is gone. Sometimes you paid, $100,000 or more into these policies. And if you didn't use it, your cash was gone. Well, now the newer ones are tied to a life insurance policy. So if you don't use it, there is a death benefit paid out to your beneficiaries, right? So it's like, wow, okay, we're able to get some money back in some cases, but if we needed to, we also had long-term care. So there's a lot of different forms of life insurance that you could use through different stages of retirement planning, okay? So I just wanted to touch on a few of those topics because I know there's a lot of good things said about life insurance and a lot of bad things said about life insurance. Before you cancel any life insurance or before you get any life insurance, you want to make sure you're sitting down with a financial advisor that's able to look at more than just one area. I always say, a lot of life insurance people out there might only do life insurance. So of course they're going to tell you all the pros to it, but you want to make sure you're working with an advisor that is able to look at the investment side, the investment planning and retirement side, as well as the insurance side to make sure it really is complementing your goals and needs throughout that retirement plan. Okay. So again, I know we touched on a lot of different things there. So hopefully you found some value in it. I know I peeled back the onion a little bit on some of the in-depth uses for life insurance. So if you have any questions, as always, feel free to reach out to us. I hope you guys are having a great week and we look forward to seeing you next week on this channel for another video. Thanks. Have a good one.